Hello and welcome to My Finance Teacher. GDX yesterday gave us a nice big green candle upwards. Does it mean anything going forward? Let's talk about it. We are going to start with the US dollar, the daily chart of US dollar in front of you. Yesterday on 12th of September, US dollar dipped below its 50-day moving average and stayed below there. And in addition to that, over the last week, US dollar basically failed to close below its 20-day moving average. In my opinion, it does mean something because whenever the intermediate cycle is in its advancing phase, the price is usually above the 20-day moving average. Whenever the intermediate cycle is in its declining phase, the price is usually below the 20-day moving average. Near the bottom or near the top of the intermediate cycle, there might be a lot of volatility up and down, and the price might be oscillating around the 20-day moving average. Now what we see on the dollar is since 21st of August, dollar has failed to stay above the 20-day moving average. That might indicate that dollar is entering the declining phase of its intermediate cycle. Plus, we've closed below the 50-day moving average yesterday. In addition to that, the 100-day moving average is not that far lower. The 100-day moving average is at 94.44, whereas the current price is 94.87, something like that on the DXY. So next week, if we do see the DXY break below its 100-day moving average, that might confirm that the intermediate cycle is in its declining phase, and we might see a precipitous drop below the 100-day moving average all the way down to its 200-day moving average at about 92.5 over the next several weeks or couple of months. With the strong jobs report recently and wages finally growing at the pace of around 3%, 2.9%, the market is expecting quite a few rate hikes in the near future. I think we will see if dollar is already in the declining phase of its intermediate cycle sometime just after the Fed rate hike, which should take place on the 26th of September. So let's say dollar stays propped up until the end of September in some sort of expectation of the Fed rate hike, although that might have been priced in already. After the Fed rate hike takes place, what's going to be quite interesting is what will the Fed have to say about its potential upcoming future Fed rate hikes. So if there is any dovish sentiment from the Fed, that will really help dollar to move down, say, towards the 200-day moving average over the next couple of months. This move down in the dollar in turn might help gold to get some momentum on the upside. So in expectation of the Fed rate hike, gold might beat the bush until the end of September. After that, if dollar proceeds going downwards, that might help gold to finally get some stronger momentum upwards. But it is still questionable whether gold is going to break above, say, a strong resistance zone at 1310. And lastly, I want to talk about the miners. This is GDX. Yesterday, a big green candle, and what's more important, this big green candle was actually accompanied by a large volume. And large volumes, especially on green days, often indicate some sort of a local minimum for the price, some sort of a low. These are several examples of that happening. So what we might see on the miners is a return to at least this resistance zone at 21. But what we're really hoping for is for a break above this resistance zone. That's just about over 23. So it is still questionable. We'll have to see how GDX behaves over the next several weeks. To summarize, the factors that I think potentially point to a nice move up in gold and the miners is dollar staying under its 20-day moving average, indicating that it's entering a declining phase of its intermediate cycle. Oversold levels on gold recently in middle of August indicate that gold has finally bottomed, also indicating that it's in the advancing phase of its intermediate cycle. We're just waiting for this momentum to pick up at a little bit steeper angle. On the chart of the miners, another factor is this positive divergence. I mentioned it in the previous video. We've seen a lower low on the GDX price, but the 14-day RXI did not confirm that, giving us a positive divergence. And lastly, large volume green days often indicate some sort of a low as well. On the personal note, one of you guys were asking in the comments, given my average GDX entry point at just below the price of 22, that's something like 21.8, and given my expectation of higher GDX, why don't I add some more and bring the average price down? That's what I have actually done, and at the moment my average price is around 20. So even a relatively modest move upwards will be quite welcome. Let me know what you guys think. Comments under the video, hit the like button, subscribe to the channel, and have a nice day.